Philippine markets resume trading this Monday. Let's get a quick check on how it's performing in the first few minutes. PSCI opening higher today by about 0.1% at the early get-go at 6,385. The Philippine peso opens weaker, just a tad weaker at 55.85 to the dollar from the previous close of 55.62. First Metro DBS has the Philippines as the top pick for the second half among ASEAN markets it tracks. With us now for more is Mark Angeles, First Vice President and Equity Research Division Head of First Metro Securities. Good to see you, Mark. Welcome back to the program.
Good morning, Kathy. Thank you for having us here again.
And you got some good news for the second half this year. It looks like the Philippines is the top pick among ASEAN nations.
Yes. So DBS, our partner on research, our regional analysts picked Philippines as one of the top pick for this year in terms of outperformance and better economic fundamentals and earnings growth.
What is the conviction then, the main conviction for that, given all the challenges that we faced in the first half?
Well, actually, Trump policies has created a complex environment in terms of investing. So what we're seeing right now is that you have to pick a country that is quite resilient amid these challenges. And Philippines fits that bill in terms of domestically driven. Earnings are mainly focused on domestic for local corporates. And then we have a lot of key risk events that are positive. For example, the reduction of sales tax. That should lower friction costs in investing in the market, especially for foreign. Those are one of their main pushback in investing in the Philippines.
But there is the risk over a potential services war. The tariffs just cover goods, but not services. And there's that risk brewing right in front of us. What are the chances and how might that affect us, given that we're really big in BPOs, the business processing outsourcing industry?
I understand that could be a concern, but in the first term with Trump, he didn't even bother looking at that. And I think the BPOs are safe for the time being. And from my perspective here is that there are a lot of things that needs to be done from the manufacturing side first before they move on to the services. And I don't think that the U.S. government will look at that as one of the main key sticking points for their tariffs.
Okay, it's good to just keep that at the back of the mind. But
for the time being.
For the time being. And look at the base case scenarios. You've put in 3 scenarios. So that's base, bull, and bear. Let's have a look and just kind of suss it out, because it's pretty interesting that you've even assigned percentages, which really gives us a bit more definition.
Okay.
But maybe you can take us through it, because we're the top pick for the base and the bull.
Yes.
But not the bear.
Not the bear.
How come?
Well, for the base, it's a 55% probability that after the 90-day truce is that the tariffs will range from the 10%, but lower than the reciprocal tariffs that was imposed. So it's practically in between that. And with that, the Philippines, according to our regional economists, is best positioned to leverage on that. And in terms of the bull case, this is the part where the tariffs is around 10% or lower. And given that our reciprocal tariffs is already lower than everyone else, most of the countries that were imposed on, the Philippines stands to benefit from that. And lastly, the bear. I think the main reason why the regional analysts put in Philippines as a second pick is because of fiscal constraints, versus Indonesia, who has more room to drive economic growth via fiscal spending, versus us for the time being.
Did you fight for that? A bull case? I mean, a positive scenario for the bear case.
Yeah, but usually when we do our research with DBS, right, we contribute on a country basis. The regional analyst will take a look at it as presented, and he will make the decision who was top pick and who's not top pick. We don't have any say in it.
But that's fair. I mean, it's fair enough that there is this collaboration, and it's good to see it from outside looking in and inside looking out. But you did make a mention of the tailwinds, and there are 2 of them that we already have.
Yes.
When you take a look at the peso, pretty strong peso, supposed to contribute to consumer confidence, and we do have a low inflation scenario.
Correct.
But what we would want to have, and probably the markets as well, is a policy rate outlook that is continuing to decline and become a little bit more accommodative.
Yes.
But how much is accommodative that might put in a bit more tailwind?
I think
accommodative
is not the right term. More like shifting to neutral, right? Because interest rates remain quite high, coming from a high interest rate environment. So just to give you a context, in the last 24 months, what were the main pushback in investing in Philippine equities? One, high inflation. Two, weak peso. Those have now reversed. So it's now favorable. Combine those two factors will allow the BSP to decouple from the Fed and go ahead and cut rates, shifting to neutral, not accommodative policy stance.
So what is neutral then? Is that going to be 75 basis point of a rate cut?
I
by
think
the end of the year?
they have done 25 already. Our DBS economist sees around another 50 bips more for this year.
Okay, so I'm now thinking that perhaps we don't have to wait. And that kind of gives credence to what economists and maybe bond fund managers tell us on this program, that we are decoupling from the U.S. And in the context of the ECB cutting further 200 bips,
Correct.
you kind of make the feeling that maybe this is the time.
Well, if you go back to 2008, right, monetary policy was synchronized across all countries. This time it's different because everyone's facing different inflation scenarios, different demand and growth prospects. So it's not really synchronized. I think the US will have to wait until the tariff data comes in and settles down. Anything you see from the US right now will be a lot of noise because a lot of movements in terms of planning ahead of tariffs or ahead of the 90-day truce. As for Europe, I think they're in the best position. It means that they're almost done cutting rates. So usually when you're done cutting rates, the markets do outperform because it tells you a signal that the economy no longer needs support. For us, we have decoupled already at the start of the year. Remember, the BSP cut ahead of the Fed. And their window is now until the next few meetings. Why? Because inflation for the second half of the year might go up based on base effects. If you recall, the first half of the year, inflation was quite high. So that's why you're seeing inflation somewhat on the softer side. But the latter part of 2024, inflation was a bit on the downside already. So we could have some positive base effects that will push inflation a little bit higher, closer to the BSP's targets of 2 to 4%.
We got about half a minute, given
Sure.
the pace at which you describe it,
Yeah.
moving towards neutral. Where do we invest our money then for equities?
Well, for now, we do like cyclical names. So in our strategy, we have a barbell strategy. On one end of the barbell, you have those cyclical names, which should outperform given the growth narrative of the Philippines. The other one is the dividend income, the high dividend yields. So those ones, if we do get a slowdown, right, you will see some yield repricing, and given the stable income, those names will outperform. So large cap index names, the SMs, the Jollibees, the BDOs, the Metro Banks, the BPI. Oh, by the way, we cannot recommend Metro Bank because we're part of the group. I just mentioned the name. For high dividend yields, surprisingly, there are a lot of consumer names that are quite okay. For example, Pure Gold giving out 5.5% yield, Wilcon around that range as well. RHI, given the recent buyback of shares, is now giving us 6%. So might as well take a look at those consumer names and buy those dividend high-paying counters.
A lot to look forward to in the second half.
Thank you,
Thank you,
Kathy.
so much. Mark Angeles joining us from First Metro Securities.